What's up, guys? So today I'll show you what I did with the results in my trading. Today is day 41 or 42, I guess, of my trading challenge. So I'm in a hedging position on the US 30. I took a $10 profit on the crude oil because I started trading also crude oil, since the hedging thing will block me from doing some trades. So I will show you the results and I'll show you on the screen what's going on. Okay, so you can see by now, I will show you where the crosshair is. I was selling this position on Friday night and actually it didn't go very well, so it started going back up. And I was in a hedge right here. Then the asset just came back to the break-even point over here on the buy ahead of a 0.2 lots, and then I just closed it. Then I saw a massive spike over here with this where you can see where the crosshair is over here. This actually candle started going up, so I decided I was going to buy again, and I bought with a 0.4 lots, which is going to allow me to almost break back even here and just close the trade to a break-even point. So this will be a non-loss profit, a break-even trade, since it started actually becoming a losing trade. And also this means I will be losing around $4 because it's the swap that Pepperstone made me pay. And also when the trade got to break even here, I closed the trade and it was to minus $4. And Friday night I closed it on a trade level over here. It was a minus $10. So the account balance stays to 2,272. Obviously the equity is going down, so this allows me to actually stick in the trade. If the asset starts firing up, I will just close everything over here, and that will be just a break-even point, since I will be losing $49 from this sell position and an average of $49 profit from this buying position. Now, what happens if the trade starts trembling back down? Probably I will start thinking about closing this one to a break-even point, or maybe just closing this buy position over here and then just rebuying and see what happens. Mainly, I'm on a long position here, so I will just try to hedge this range. The range I'm trying to hedge is 0.36% range. On average, the Dow Jones could be moving like even 1% in one single day. So all I gotta do is I just gotta wait and be patient. If it starts crumbling back down here, we'll probably close the sale, see if it actually comes back up. If it comes back up, I will probably close the buy, just accept the loss, close this to break even. If it starts just crumbling down, I will re-head down here with a 0.4 and see what happens. So on average, what I want to do is I just want to try to not lose too much money and just try to avoid losing too many trades. So that's the only way I can make a profit. What I did here is today I bought on the crude oil here and just saw it going up. It was a plus $16. Then it just started tumbling down. I closed it to plus $10 and just closed the trade. Now, I don't see the crude oil actually still going up. Probably it could go up if it breaks through this little spike over here. I could be looking for a breakthrough and just see if it follows the trend line. So I will go back on a long position with the crude oil. My break-even point, where I will try to close the trade to a break-even point, will be around the trend line. And if there's no break-even point, I will just hedge the position and see what happens. So this is it. So this is the only two assets I'm going to be trading. I'm looking forward to seeing what happens when the market opens. I could also close the trade over here and just see what it does. I mean, it's a pretty strange situation. You know, hedging allows you to actually lend money and just wait for the market. Otherwise, the market could go back here. I could close the trade and then see it going up and then just reopen the sell if it starts tumbling down. Yes, that will enlarge my range, but you know, sometimes the market just goes back down here and then just goes back up. So all I've got to do is I've got to be patient and just wait for it. This allows me to take less trades on the 5 minutes time frame and also to trade different assets. I'm looking for the crude oil and probably another asset, but on average, all I'm doing is I'm trading for the same margin on every asset. So US 30 Dow Jones allows me to trade with $365 required as a margin, and I'm doing the same with the crude oil. I'm trading 0.46% yeah, 0.46% contracts on the crude oil that requires a 365 margin. So on average, I can trade a lot by just closing the trades and recouping the margin, seeing what happens and things like that. So let's see what the market gives us today. Today is Monday, and this is day 41 or 42 of my challenge. I don't remember very well. So when the challenge ends to 90 days, I will get to $10K. I mean, I will be trading $10,000, and we'll see what happens. So this is it for today. This is this is just trading. I mean, you hedge the positions, you try to get out and roll out of those positions on a break-even point, so you can avoid trading too much and over trading, and that allows me to actually stay calm. The other assets I will be trading is assets I've actually saw as really long in assets, like the crude oil and also the Dow Jones. There will be probably a trading on some stocks like Tesla, Microsoft, and Google, but we'll see. That it's gonna be it's gonna be a challenge. So thanks for being here. Let's go to these 90 days, and then I'll start trading with 10K real money, and we'll see what I can do.